Great, thanks to be back again, Tim. Just like to say, it's great to be presenting the venture story here on Share Cafe, and it's going to be a pretty exciting year for the company as we become a producer with the O'Reilly iron ore mine kicking off shortly. But the company's much more than that. We've recently attracted a joint venture with Chalice, kicking off the joint venture work on a Julimar lookalike target in our Southwest project. We've been at Coolin, where we've actually completed a maiden drill program, following up some pretty exciting trench results we announced early this year. And we're currently drilling at our Golden Grove North project. But let's not forget that 10 years ago, Venture was completing a feasibility study on its Mount Lindsay tin tungsten project, and almost to the day. And last week, tin broke record prices of over $33,000 per tonne, which it last achieved in 2011. So, yeah, so a lot seems to be happening in our space. Next slide, please. Yeah, market cap now is around about $150 million. So we've had a bit of a resurgence with the iron ore price and with the Chalice joint venture announcement just recently. Moving forward, please. Next slide. The board is the same board that we started off back in 2006. So we have all the experience and knowledge of our tin assets and our iron ore project in Tasmania, which we started working on back in 2007. So we're very blessed to have the same team on board, so we can bring this forward. These assets that we've been sitting on, waiting for these prices to come back. Next slide. Now a little bit about our iron ore project, O'Reilly, there on the west coast of Tasmania. Next slide. Yes, as you can see from the map there in red, we've got the 120 kilometre long haulage route. It's all bitumen road from Riley to the port of Burnie, where we will ship up to 45,000 tonne vessels. All the permitting's completed. We have road and port access all signed, sealed and delivered. So we'll be able to start that shortly. Next slide, please. The Riley Iron Ore Project, it's like a FMG, super special fines product, very similar. It's only got 1.6 million tonnes. So it's timed well for this market. You can see the price is high. It'll be a couple of years of mining, so we can move quickly. We're on the verge of our first shipment, and we can take that advantage. But it's very simply top 1.5 metres thick blanket across the landscape there, so it's very straightforward process and no strip ratio. Thank you. Next slide. So where we're at now at the moment, we've got basically all the structural steel has been erected. We've got 80% of the mechanical installation completed, so we're at that final stage of putting the piping in. We've built a nice little team down there, lots of iron ore experience. Just recently, Jeff Halloran came on board, general manager. He's started 3 of this size sort of iron ore projects previously, so we're very fortunate to have him. And now our iron ore price is now $230 a tonne. So compared to the economics we put out back in August 2019, we made 30 million tonnes at a $90 price. Obviously, exchange rate is a little bit significantly lower as well, but still we're significantly higher than that today. Next slide. So upcoming milestones for the company, and you can see the commissioning of that plant's any day now. First haulage will happen shortly thereafter, and shipment towards the end of this quarter. So it's a pretty exciting phase for the company as we look to move from explorer to producer. Next slide. So now moving on to the Southwest project, the Chalice joint venture. Next slide. This is a joint venture we did back in July last year. Chalice was $1 a share back then. Obviously now it's around $7. And we signed that joint venture so we could get, I suppose, the IP, that Chalice had done from their Julimar discovery. So we got them to commit to a $3.7 million spend and 70%. At that 30% mark, Venture can hold its position. So funds from the Riley Iron Ore Mine, for example, could be used if we get onto another Julimar discovery. As you can see, the geology is quite similar in the similar part of the terrain, and also our Coolin projects to the southeast of Julimar is not too far away. Next slide, please. The fact that the earning has just started this year, the first 12 months, we have $300,000 for Chalice to spend, and that's going to be done by July this year. So they're on the ground doing a significant ground EM program, and in the areas that they have selected, Julimar lookalike type features in the magnetic anomaly at Tor. Beyond that, but they are actually doing work over airborne EM anomalies that we completed previously. So the chances, I suppose, of having drill targets coming out of the exercise is quite significant. Next slide, please. So this, I suppose I call this the money shot here, and you can see that the mag anomalies are very, very similar between Julimar and Tor. I suppose that's what attracted them. Next slide, please. And what you see is that we have 6.5 kilometres of EM anomalies, very much exactly like Julimar. And those yellow lines there are the ground-based EM, which normally do the ground-based EM to sort of firm up your airborne targets. But back in 2018, Venture went ahead and drilled a diamond hole, and we got massive 2.5 metres of massive sulfide, which had copper, nickel, and cobalt in it. So I suppose that's part of the reason why Charles is attracted. In fact, we've, have proof of concept. Next slide, please. Now, just moving on to our Mount Lindsay project, we'll just finish up on that today. Again, Mount Lindsay, very close to our Riley operations. Next slide, please. We've been working on that since 2007. We spent $35 million. Now, for those who don't know a lot about tin, it's an important part of our fourth industrial revolution. It's all about solder, and that's the glue that connects everything that's electronics. So, very, very diverse commodity, and it'll be an important part of a green industrial revolution as we move to everything into converting our economy into an electricity-based economy. So we start talking about solar cells, wind power, energy storage, EVs, recycling. Tin is a little bit of tin in every part of that cycle there. Next slide, please. And you look at the solar market, which has obviously been impacted by miniaturization, but that's sort of hit a brick wall. We're still converting from to lead-free solder. Solder used to be 60% tin, 40% lead, and now it's 96% tin and 4% silver. Now, the 5G network's going to need a lot of stations put in, probably millions of stations worldwide. So there'll be, circuitry for all of that. There'll be also, because of the billions of Internet of Things and smart devices out there, each one of those requires solder or circuitry. So that's tin required for that, and it'll be 30% more, 5 times as much tin in a EV than there will be in a combustible vehicle. So tin's very much joined at the hip with, I suppose, our future lifestyles and economies going forward. Next slide, please. And not only do we have tin at Mount Lindsay, we've got tungsten, which is a critical mineral. This drill hole's from 2008. Look up the critical mineral prospectus in the tungsten section, and you see that photo there, and Venture Minerals Mount Lindsay project mentioned quite significantly. Next slide, please. Tungsten, for those who don't know, is ranked as a critical mineral not only by Australia but by the UK, the EU, Japan, and Russia. At the end of the day, it's a pretty key component to industries vital to national security. And the US, since John McCain in 2018, and recently Donald Trump, and obviously the Biden administration hasn't changed their viewpoint there. But as end users with Europe, they are looking to reduce their dependence on Chinese production. So we are well positioned being an Australian asset. Next slide, please. So, Mount Lindsay, we're looking at again. We're looking at a smaller, higher grade version with the demand in EV and critical minerals increasing. Mount Lindsay is one of the largest undeveloped tin deposits in the world. And with that, we've got a very significant portion of tungsten associated. So they very much are co-products, tin and tungsten. And we're going to focus on the higher grade one in that study, which we nearly completed before Riley became the focus for the company back in 2019. And you can see there's 4.7 million tonnes there at pretty high grade material. Next slide, please. There's 83,000 metres of drilling done. It's over 60% measured indicators categories. This is, with $35 million being well spent, all the test work's been done. We've proven we've got a very high tin concentrate of 75%. Normally it sits in that 55 to 60% range. So we're very fortunate to have a premium product. Tin's at record highs. It's gone up over 130% since the 2016 lows, and tungsten's also starting to move quite significantly. Next slide, please. There's also other targets, and as you that we've been working on, I suppose, since 2014, and we've got a target along strike from Renison Bell, which is Australia's only tin mine, very significant underground mine. We've got a field, a alluvial field. We're on the same fault, same mineral, same geology. And the next slide, please. And you'll see from the next slide that we have a very much an EM target there in the bottom left-hand corner. It's coincidental, which is an EM is used as the exploration tool of choice. So, we have a very exciting target there, and another 49 EM targets to look at there as well from that work done in 2018. Next slide, please. So just wrapping up, exciting phase of the company, moves from explorer to producer with first shipment from Riley. We're well positioned in terms of EV and critical minerals with Mount Lindsay, and Chalice is beginning its work to, I suppose, bring forward the potential success of a Julimar lookalike number 2 being found at our Southwest project. Thank you.
Andrew, thank you. And a lot's changed since we last had you back on, particularly the iron ore and the tin price. Did you ever expect to be in that position with pricing?
Well, look, I woke up on Friday morning and iron ore was a record price and tin was a record price on the same day. But since then, iron ore's taken off even further. So we seem to have got our timing right, Tim.
It certainly looks that way. So how do you execute on that timing? There's some questions here from shareholders who are obviously always impatient. How do you balance needing to capture that price with delivering on expectations?
Well, look, we're on the verge of commissioning the wet screening plant, so expect some news flow on that very, very soon. And from that stage, once you start commissioning, you can start putting the ore through the plant, and once you get a sort of like a 10,000 tonne stockpile, you can start hauling. So we're still on target for this quarter at this stage, so it's looking pretty good. So once that first shipment comes out in June, then you'll see cash come in, and once that cash comes in, we'll start redeploying that to getting Mount Lindsay, get the permitting finished. We've got a much smaller capex scenario, probably looking at $50 million. So that's well within the capability of the Riley project. So we can potentially self-fund the build of the Mount Lindsay Tin Tungsten project. Yeah,
okay. There were some questions around funding. And so the idea is to get this first iron ore shipped out. It's scheduled for June, and then to use those profits across the other commodities.
Well, it'll be a nice position to be in to have that money coming in. Certainly, Mount Lindsay is our flagship project, and we're looking not to raise any more capital. Maybe dare I say do dividends if things go really well with the iron ore price. But there's a $50 million bill there at Mount Lindsay. It's very advanced. We're a long way through the permitting. So while Riley's being completed, we will look to start getting Mount Lindsay ready for building once Riley is finished, and we have the opportunity with that money to look at either holding a position, and if Chalice is successful at Southwest project, 30% ownership there, or on other exploration assets we have in WA. So we're sort of blessed with many things. We also have the Livingston project has 500,000-600,000 tonnes. We could mine that and maybe get a third year of iron ore production if the iron ore price is still there in 2 years' time. So many multiple opportunities. As I always say, when you've got money, you've got plenty of options.
You're certainly spoiled for choice. The market doesn't seem to be giving much value to Golden Grove. Can you tell us a little bit more about that?
Well, look, Golden Grove, we're out there drilling our second phase, and we got a fair bit of attention back in November last year. We hit that, November, December, we hit 7% zinc, couple of grams of gold, % copper, and then half ounce of silver in our first RC program, first bit of drilling at Golden Grove. But as was the situation at Golden Grove, historic Golden Grove mine just to the south of us, it's deeper drilling is the answer, and that's what we're doing with the diamond drilling at the moment. So, we're obviously those holes are going in the ground at the moment, so expect some news flow to come out from that. So, yeah, look, I think the attention is probably on the other three assets at the moment, particularly the iron ore and the Chalice joint venture.
And just finally, you've had this question here. You've had almost 40% of your registered turnover in the last little while. Are you attracting institutional support, or are you still too early for that?
I think it's probably still a little bit early. I think once you get the iron ore up and running, then I think we'll be poised. And I think the institutions will be very keen from exposure to tin. And there's not many tin companies out there. And our project, even though it's 40% revenue is tin, and 40% tungsten, 20% magnetite, it's a very profitable, low cost operation. So I think very much the exposure from funds could be when the tin gets reignited.